Hello, good morning and welcome. This is forexforsteadyprofit.com. I've been asked by Felicity, one of my subscribers, to explain the ratios and also the divergence on the commitment of traders. So I'll go ahead and get that sorted. Just have a look at the commitment of traders chart. Right, so this is the commitment of traders report in its raw form. This comes out, barring bank holidays and other things that sometimes catch me out. It's out every week on a Friday about 8:30 GMT, and it shows the positions taken by some of the best traders in the world, and it gives a real insight to their thoughts on the market and their fundamental analysis. Right, so if we look here, this is the Swiss franc, and you get the non-commercials, which are speculators, and then the people I'm interested in are the commercials. And I look at their positions, and I also like to plot them on a graph against the non-commercials because I'm looking for a divergence between the two, where the commercials will be either heavily long or short, and the speculators will be exactly the opposite way round. So if you look at the long position and the short position, there is a ratio between longs to shorts. And in this case, the Swiss franc, on the commercials, they have a long ratio of just over 7 to 1. So for every 7 contracts they've got out long, they will have 1 contract short. Diversely, on the other side, the non-commercials, the speculators, they have more short contracts than they do long. So there is a divergence between the two, and we will have a look now on the graph to see how that pans out. Okay, so this is the Swiss franc, and this is a graph of the commercials, which are in red, and the speculators, which are in green. And as you see here on the graph, the commercials and the speculators have taken directly opposite positions. And as you can see, the commercials are an extreme. They're an extreme long position. Now, the positions taken by the commercials, if you have 7 positions long and 1 position short, so there are 7 times as many speculators long as there are shorts, that gives you a 7 to 1 ratio of longs against shorts. And for the speculators, they have it's about 3 to 1. So for every 3 contracts they have short, they have 1 contract long. And if you follow the commercials at the moment on the Swiss franc here, this is an extreme bullish position that we have. So if you go back and you have a look at past bullish positions, they've led to these nice moves up. And this one here, nice move up. So by using the commitment of traders report and plotting the positions on the graph, you can get a picture of where positions were historically, and also the consequences of a move by the commercials, long or short. And this gives us a really good indication of what to expect. So now we'll go and have a look at a different chart. This is a divergence calculator. This is available in my members center. Okay, so here we have a divergence calculator. So you can take a currency like the Swiss franc, and you can put in the long and the short positions. These are for the non-commercials, and you get a ratio of 2.72 to 1 short. And then you do the same for the commercials, and you get a ratio of 7.17 long, which gives you an overall divergence between the two of 9.89, a divergence of 9.89 long. Now that is the most long currency actually on the divergence this week. And if you put that against a currency that is basically short, like the Canadian dollar, that has got a short divergence at 8.82, that gives you, let me just see, Swiss franc, Canadian dollar, Swiss franc has got a short divergence of 15.71. So that's an extreme divergence. So by looking at the pairs like this, you can get a much higher probability trade than you could if you were just using the straight currencies. And I do prefer the crosses. The last 3 months they have given much better opportunities, and this is what I've been using in my members centre the last, as I say, 3 months. Okay, well, I hope that has helped a little bit. And you know, when I come to use the candle charts, and you see my commercials ratio and my speculators ratio, you can understand kind of where they've come from. And the other thing to watch, of course, is open interest. You know, just before a currency, if it's overstretched and it's going to fall, open interest often dips, or if it's oversold and you're looking for it to go back up, open interest often goes up just before the rally. So that is another thing to look for. And hope you enjoyed that, and we'll get on with the report for today. Okay, thank you. Cheers. Bye. Hello, good morning and welcome. It's Sunday, it's the 3rd of December, and we've got the Commitment to Traders report was out on Friday. As ever, we will start with the Australian dollar. We've seen a nice move off the highs for the Australian dollar, and it's come down. It does look to be having a little bit of a bounce back up at the moment. It didn't get quite as high as I thought it would. I have some trades in, but I think this is going to follow through to the zero line. So I'm expecting this to continue on down, and I'm expecting for a fall in the value of the Australian dollar. So we'll just have a quick look at the charts. As you see, I've got a couple of trades in at profit at the moment, and 2 trades that aren't. I think this might just bounce up to 77. I'm going to hold my positions because I think it's going to continue on down. If it bounces up to 77, I will sell it even harder. We've spiked up on the RSI, and we have a commercial short ratio of 2.17 to 1, which is reduced from last week. And also the open interest is actually a bit higher. So just on open interest and the fact we've reduced our ratio, we might just expect a little bit of a bounce up on that pair. There we go. Now the next one, British pound. If you look at the British pound, it's taken an even more bearish position. We've seen a rise and rise of the British pound. On Friday, it went up again. So did it? The Canadian dollar. The commercials have taken a slightly more bearish stance. We've been going sideways for the last few weeks. We did see on Friday, we saw a bit of strength in the Canadian dollar, a massive candle up on the employment figures. I saw that as a good selling opportunity, but I did take it on the crosses. Canadian dollar, Japanese yen, and the Canadian dollar, Swiss franc, I believe. So I have traded that at the end. We're below the 50 on the RSI, and I'm going to have to wait for my trade here to come back into profit. A bit of a shame that, but still, there you go. Next one down is the euro. The euro, I'll just put this on a 5-year chart. This is an extreme, more or less, on the euro for the last 5 years. You can see that. I am expecting this to turn back down. And also we have, I'll do the US dollar because we've got a pretty much an extreme on that as well. So you've got the euro extreme short position by the commercials, and you've got a dollar index, a long position extreme. So if we have a look at the chart for that euro dollar, I am expecting this to come back down. We've got a short ratio of 1.64 to 1. In context, you have to look at that. It is an extreme position. The commercials have been bullish the euro for you know, a long time. So to get that sort of ratio short is really quite heavy. We're at fairly stiff resistance support at the moment. We're about bang on it, and I'm expecting this to fade next week and come back down. We'll see where that goes. Japanese yen. Anytime today. Yeah, here we go. We're still at a fairly bullish extreme. We've seen the price go higher for the yen. We've pulled back a little bit, and I'm expecting the price really to carry on up. So we'll see how that goes. I did get knocked out last week, and I'll be looking to get back in, but I prefer it again on the crosses. So I did have a couple of shorts in here. We have a commercial ratio of 6.75 to 1 long. That's long the Japanese yen, but short the pair. I see it as a fairly good sell from up here, but I think there's a better risk reward on the crosses. We've come up, we've bounced off the 60, bounced off the 50, and I'm waiting for a break back down through my trend line. We'll see how that goes. Swiss franc. I really like this. I'll look at a 5-year chart because I think it shows clearer what we're trying to say. We've actually gone flat on the top of the commitment of traders, the commercials. We've seen a little bit of an increase in the price of the Swiss franc, and the commercials haven't lost any of their bullish stance and remained firmly bulls of this currency. We'll see the chart. So here we have the Swiss franc. We got a commercials ratio long of 7.17 to 1, slightly reduced from last week. We got this nice big candle down on Friday, basically because of the weakness in the dollar. And we'll see where that goes, but we will be short this on the crosses. I'm not actually trading it at the moment against the dollar. We're well below the 50 on the RSI, and we're pointing nicely down. So we'll see where that goes. Next one we've got, this is the US index. I haven't actually got it on a bar chart, but as you can see, if you put this on a 5-year chart, you can see how bullish the commercials are of the US dollar index. So this is the last time that we were this bullish, and we had this really nice move up, and that is why I think that the dollar is going to go up. So we've had a little bit of a pullback on the last few weeks, but we'll see where that goes. I am heavily bullish of the US dollar on more or less everything apart from the Japanese yen. Mexican peso. I still have a trade running on the Mexican peso, one trade left, and I just want to get out of that one. But the um, the commercials are bearish of the Mexican peso against the dollar. We've seen quite a pullback over the last week or so. We saw this nice move up off the bottom, pulled back, and I actually got another trade in long for the pair about at the bottom. I took profit at the top here and got in at the bottom. We appear to be showing more weakness on the peso, and hopefully that trade will come right for me. New Zealand dollar. Um, I am expecting this really to go down, but if you look at the commitment of traders, this is as bullish as the commercials have been, for over the last year, and we've seen some really nice rallies in the price of the New Zealand dollar. This is a 5-year chart. And this is fairly bullish for the commercials. There's only been one more bullish position they've taken, which is back there. So I think we might see a turnaround in this, but we'll just see. We'll just see. Energies, crude oil. As I said last week, the commercials are as bearish as they have been for a long while. We've crept up. The price has crept up. This is a 5-year. This is a 5-year extreme of how bearish they are. I have a couple of trades already on this. I've got one right in more or less at the top. We'll see where that goes over the next couple of weeks, but hopefully, that will come right for me. Grains, lots of metals, silver. The commercials are as bearish silver that they have dropped off a little bit. The price did get a bit better last week. It fell a bit. They've lost some of their bearishness, but it still is quite a bearish extreme for silver, and I'm expecting this really to follow through over the next 4 or 5 weeks. Palladium. Let's have a look at palladium. Yeah, the commercials are bearish. Palladium. It is a fairly big extreme, I believe. If we just go back, yeah, I would say that's about as big as it's been for about the last 2.5 years, something like that. So that's worth keeping an eye on. Palladium, I don't know if anybody trades palladium, but I think we've got a similar position on platinum. Yep, we have got a fairly bearish position taken on platinum. S&P 500. This is incredible the way this has gone up and up, and the commercials are still bearish of the S&P 500. We had a little bit of an extreme Thursday, Friday, where the price plunged and then went back up. So that might just have been the start. It only needs something like that just to kick it off, because the real value of the S&P is somewhere down about the 200-300 mark. So we'll wait and see what happens with that. I just think it's hilarious how overpriced it is. We'll see where it goes, but anyway, yes, this is the chart I was talking about. It just shows the percentage of S&P members above the 20-day moving average, and as you can see, this is quite old. This is going back to August. As the price has gone up, so the members have actually declined. Just thought I'd pop that in there. Okay, thank you. Cheers.